Over to Bloomberg Radio surveillance. That is where PIMCO CEO Mohamed El-Erian is speaking with Tom Keene.
Over the week, Dr. El-Erian?
Neither has he called me, nor does he need to call me. I think he's got his act totally together, and what he did in Foxborough last Sunday is more than impressive, Tom.
What's going to happen to the Jets on Sunday? You're a big fan.
I'm a huge fan. They're going to play a very talented team in the Steelers. They have a tough defense and even more dangerous in terms of what it means for our quarterback. So hopefully the Jets will play as well as they did last week. They're going to have to step it up on offense, and let's hope they can continue with this amazing defense.
Mohamed El-Erian, Jets surveillance expert, as we have Arthur Levitt as our New York Giants expert. Fun here for all of you on television worldwide joining us. Thanks, Deirdre, as we talk to Dr. El-Erian about more serious topics as well. The elite will meet Dr. El-Erian in Davos. What would you like to see the discussion points be in Davos as we try to sort out Europe?
I'd like to see them focus on two issues. And Tom, you're going to be there, so I hope you will tell the elite the importance of focusing on these two issues. First, how do we manage a multi-speed world? We are seeing different parts of the world behaving differently when it comes to growth, when it comes to inflation, when it comes to credit concerns. And that is unusual, and we need to manage this multi-speed world. So that's the first issue. The second issue is how do we reconcile short-term policy priorities with long-term realities. And this is everywhere in the world. There are still too many governments that are happy to kick the can down the road rather than deal with medium-term issues today.
Where are the commercial banks on this? We need a distinction here between the performance of the U.S. commercial banks, Mr. Diamond, Mr. Moynihan, and all, versus the European banks. They've been silent. What do you want to see from Ackerman and the other leadership in European banking?
The same recognition as we had in the U.S. that you have to strengthen your balance sheet, that you have to value your assets correctly, that you have to raise capital, take advantage of this moment, this favorable moments in markets to raise capital. I get a sense that some of the European banks are not as well as advanced as the American banks are in strengthening their balance sheet in order to make sure that they can navigate this multi-speed world.
I mean, you look at the multi-speed world, you've got to invest in it. Bill Gross, your colleague, suggesting the bond regime is slowed down. Margie Patel was in from Wells Fargo the other day talking up, you make the coupon in that is it. Where are the opportunities then if they're not in bonds?
The opportunities are everywhere, including in the bond market. I think people tend to simplify the bond market to just government bonds. There's a lot more there, as you know. There's high yield, there's investment grade, there's lots and lots and lots in the bond market. So our simple principle, Tom, and when one faces a complex world, it's important to look for simplicity in order not to get confused by all the moving pieces. Our simple concept is what Bill Gross has called look for safe spread. Look for real interest rates that provide you some assurances of an increase in your purchasing power. Now, that takes you to certain segments of the bond market. It also takes you certain segments of the equity market. It takes you to certain segments of the commodity market. So there's lots and lots of opportunities up there, but it's no longer an easy top-down call as it was in 08, 09.
I like that, but you've got high real rates. Let's take Ireland as an example. I don't know where the 10-year is, but it's ugly, and they've got inflation. Those high real rates really impinge against the domestic economy of Ireland, don't they?
Correct, and that's the problem facing Europe, Ireland, Portugal, Greece, which is that their current interest rates are not consistent with the resumption of growth, and therefore it makes growing out of your debt problems difficult. Now, there's a reason for that, which is that creditors want to be compensated not only for interest rate risk, but they want to be compensated for default risk, and that's why these interest rates are so high.
Inside surveillance, folks, is the way to get questions into our guest, Steve.
All right, well, that was PIMCO chief, and we have to say avid Jet fan, Mohamed El-Erian, joining, you saw him there, Tom Keene on Bloomberg Radio surveillance.